Hi, everyone. Hello, Paul, Hugo. How's everyone doing today? Interesting day yesterday with the hot CPI number. So I want to start off with the yen because it's still my view that this is a failing rally and that we're headed lower, which means that I'm still looking for lower yields. So yields came off after the number and then spiked again, right up against its moving average. Looks like yields are going to head down again. I wouldn't rule out actually another test of the line and another new low in yields. We'll see. Keep in mind that there's a testimony by Powell today. And if Powell wants to put a lid on things, which I don't think he does, today would be the day for him to talk about it. Hello, Thomas. Nice to meet you. So what's happening with the euro? We're getting a bounce in the dollar. Dollar looks like, kind of a triple top here. I don't know if we made a new high. You could almost call it a three drive up here. Um, Dollar's stronger than Canada. Canada's coming off. I still think it's vulnerable for a move back down to 23. And they're trying to break crude, but look at where crude held. So needs to get back under 74 or else we'll probably challenge a high. So I tried it again. I already took partial profits. If I'm right about the yen, then gold should continue. That's something else I was talking about. I was looking for it to rally to this confluence up here about 1830. And silver is bringing up the rear. It's not even close to this high. You see that? So the gold silver ratio that broke out at 68.5, it's holding this 68.5 breakout. May pull back there again, but it still makes gold the preferred long if you're bullish, and silver the preferred short when you're bearish. So silver is going to be interesting. Um, Maybe we get a rally up to 2680, as I was showing yesterday. There's a lot of resistance back up here at 27 confluence with the 50-day and the 200-day is what is supporting silver. So maybe we get one more shot up here while the yen sells off maybe all the way to, under 108 or even tries this high, this low at 107.60. Hello, Gorkum. Any questions? S&P's bouncing back after yesterday it came off. We had a little reversal. Nasdaq still stronger than the S&Ps. They both diverge, but that's been going on for a while. And Bitcoin still continuing to drop. I want to point out that I think that when crypto bottoms, that Ethereum's going to be the preferred long. Okay, because look, it's up 0.5% with Bitcoin down 0.75%. So it's starting to demonstrate a little relative strength. Nothing I see RSI wise tells me I have to be in a hurry to buy it because, we do have momentum down around 25. You want to see lows in markets with the RSI. Oh, you're welcome, Hugo. So you took partial profits right away after the number. Okay. I'm glad to help. So when you're looking for bottoms, you want to see RSI readings at 30 or above. So crypto's not there yet. This is an interesting formation. I think Stelio will like. Look at this. Doesn't this look like a kind of a head and shoulders? And we had a neckline at 85.40. So that measures down to 84.70 just based on this formation, which I believe is going to take you down. Is this a low here? 84. 84.72 has been the low of the move, and that's what this formation measures. So Lydia yesterday said that she thinks this is accumulation. I tend to agree with her, but maybe we just have to take out that the stops under the lows first. But it's kind of a grinding decline. And that's all I have. We have Adam Button here today at the bottom of the hour. Adam will be with us from Forex Live and see what Adam's looking at, what kind of news he's focused on, and we'll see what Paul has to say later on to Congress. The Senate usually asks better questions than the House, but we'll see. And keep in mind what Harold Malgrim said in his interview last week, that although it looks like the Democrats have cobbled together an infrastructure deal, Harold thought that they would have to engineer some type of decline in equities to get Republicans on board. So we'll see. This is Powell's first opportunity to do so. Right now, the market doesn't think so. So I'll bring in Stephen Stell now to
Good morning.
Talk to you. Hey, Stell, and I believe that Greg is going to be joining us for a little bit too today.
Oh, excellent. The Wizard of Waves. Let me take the screen.
Yeah, go ahead, buddy.
Yes. So you just to start with the Europound, you talked about the lows there. I think we're going to see an 83 handle. That's what I want to see. I think we're going to take out the stops, and anywhere in the 83s, I will start accumulating some longs. First time in years, literally.
It is, and I could vouch for that. You've been a bear for, I don't know, as long as Forex Analytics has been around.
Not quite, but yeah, almost.
Oh, okay.
So we have Powell, like you very correctly said, he's speaking. And this is now, he will have to explain the inflation rate, right? And he's going to have to explain what they're willing to do, because it's one thing, like Ryan from Forex Flow, he's very correctly said on Twitter a little while ago, that it's a different thing to have to explain 2.5%, 3% inflation is very different to have to explain 5%, even if it's transitory, just like they say, they claim. So I think it's going to be interesting today. I still think that the dollar is going to go lower eventually. I used to think there was a high probability scenario that we get to 94, 94 and a half, somewhere around there. But, you know, DSI is changing. The dollar DSI is now 55. Position is changing. So it's not that one-way street that it used to be. And that's worrying me in terms of a bullish scenario. But I think we're going to go lower. How do we get there? We might spike a little bit and then go lower. But you know, that's my view on that.
Hey, Stell, on the inflation front that you were talking about, one of my mentees is, you know, in the construction trade.
Yeah.
And he was showing me some things from, I don't know, Lowe's or Home Depot, along with a lumber chart. You know, lumber's back down to 600. But all the prices people are paying retail, you know, they're not going to come down. I mean, I've noticed it with energy over the years that on the retail side, prices go up on a rocket ship and they come down on a parachute, if they come down at all. So even though they've cut lumber in half, they're still passing on prices like it was still 1,200.
Yeah, check this out. It's the price is rising. You know, anyway.
But they screw the little guy when prices are going up. They have to pay it, and they don't give them back. They don't cut prices because they cut lumber in more than in half at all. Yeah,
of course they do. Capitalism, yeah. Same with the fuel at the fuel pumps. I mean, you never see them going down.
No, never.
Yeah. So
I'm sorry, you're going to euro, I think. Yeah.
Huh? Sorry?
I thought you were going to the euro before I interrupted you.
No, it's okay. It's all right.
Okay.
We had the RBNZ, very important. They were hawkish. They announced that their long-term asset purchases are no longer necessary, and they can end them by this week, next week, or whatever it is. The market, from what I understand, was pricing. I mean, we already knew they were hawkish, and the market was pricing a rate hike by the end of this year. I think now it's been pushed back to something like August, September, wherever the meeting is. So the Kiwi is doing very well, and it's against the dollar for sure. But then again, the market was already aware that the RBNZ is hawkish. They just gave us a little bit more, just a tiny bit more hawkish stance. The dollar is still trying to decide what's happening. After yesterday's CPI print, it's a difficult call to make. Like I said before, the DXY, I don't know how it's going to get lower, but it will get lower. And then you have things like metals, which are doing well today. And you guys know I'm a bull. I still think we might see, a little bit of a drop in gold, maybe, especially if the dollar firms up. But man, I want to be buying all these dips, and silver. I showed this yesterday again. I think we're in a, this thing, $0.50 here, $0.50 there is noise in terms of the greater structure here. And I think $30, when that goes, it's going to be just straight up from there. But
what if
obviously,
we take out the lower line, bro?
Yes, if we take, well, I always said I want to be a buyer somewhere between 22 and 24. I know it's a big range, but 22 is these lows down here.
Okay.
So I know it's a big range. It will depend on the speed and how we get there. But in a way, I kind of wish we'd go there, because I want to be long more than I am at the moment. I've started quite cautiously, and I am either going to add down here or I'm going to add on a break. Either way, I'm adding. Yeah, and it could be right, could be wrong, as always. Cryptos, Bitcoin is still trying to bounce. It did touch this. I know it's very roughly drawn here, but it's getting close to these lows here, and it touched them. It bounced back up again, but it's still looking very weak as far as I'm concerned. And I've said it yesterday. If I was long, I think I would be bailing out somewhere here. Or I'd be very close to bailing out, because it just doesn't look at all strong. Now, the other news we had was from OPEC, and the Saudis and the United Arab Emirates apparently have reached a compromise, and there's going to be an increase, and the new baseline is going to be 3.65 million barrels per day, and they're going to arrange another meeting soon. So, it looks like we might be getting some kind of progress there, but still oil doesn't care. If you look at the big picture, it's been a straight line from, ignore the negative spike, it's been a straight line from 10, $15 up to 75, which is incredible in just a year and a half, or less than that. So, what do I think about oil? I think we talked about this a few days ago here. I think we're in a level where I think it's a very good risk reward to be looking for shorts, because this zone here has been 10 years. It's been touched quite a few times, and I think that this is we could see a reaction. I think there's always a black swan event probability something might happen, and what happens with oil, it just goes ballistic. So if you're trading this, I think you should be very careful. And actually, I don't know what the futures curve is like now. If you short oil, is it in backwardation?
Yes, it is in backwardation.
So you're losing basically if you're shorting it. If all else is unchanged, same as it was with the contango when oil was at $15. The futures curve was higher going further out. So you buy. What do you buy? You buy the next contract. Well, if you're at $15, the next contract was at 25. So the market had to go up by that much for you not to lose money. So it's a very difficult thing to be trading oil when it's at extremes because of the shape of the forward curve. But the alternative is you can take a view on a currency. You can take a view on Norway or Canada or something like that. And we do have the Bank of Canada this week, by the way. We wait to see what they're going to do in terms of their tapering. We're kind of sitting on the edge of our seats, waiting to see what's going to happen, because we have quite a few central banks now who are changing the tune, and it's very it's likely that we're going to get a domino effect. You're going to get then the Fed and whoever else following. So we have to be wary about that and trade accordingly.
Dow made a new all-time high yesterday.
I was about to say equities. I mean, look at the S&P, the Dow, the Nasdaq. I only see 45-degree angles, and it's incredible, but that's what it is. So
pull up IWM if you have a chance. It keeps making lower highs. It's the only index that hasn't made a new high since the spring.
Yeah. And then again, look at this move here, and then this sideways.
Yeah. Is it distribution or just consolidation? What do you think?
Good question.
I don't know why it's not participating at all.
Yeah, if you put a gun to my head and told me to do something, I would probably be buying this. I know it makes no sense, but with all other indices going to all-time highs and just keep going, but we need to wait to see how this resolves. But if we break above, these highs here, it's most likely we're just going to keep going. And valuations are crazy, but hey, that's the way markets are going. So. There's no point going ahead, in front of the train coming and, getting killed. So anyway, equities are near all-time highs, pretty much every single index, major indices, and, what do you do? I'm not getting in the way, that's for sure. So that's what I have. I don't know if Steve's here or if Greg is here.
Of course I am.
Oh, you are, damn it. Damn it.
You're not, this is not your lucky day, yes.
Well, I'll pass you the screen and you can do whatever you like.
Nice review, still.
Thank you. I don't see Greg. Maybe he'll join in a few minutes.
I just saw on Skype that he said he was going to be here. Maybe he meant the morning edge.
Yeah, perhaps he's going to be in the morning edge.
Yeah.
So, guys.
Hi, Steve. How are you?
Hey, good. How have you been?
Pretty good, buddy.
So, I agree with most things with Stelios, so there's that. Now, I'm also very skeptical about this dollar's rebound, especially as long as equities remain very well bid. We did see an initial reaction higher in the dollar following the CPI data, which we did expect that stronger CPI data would get the dollar bid for all the wrong reasons, because people believe that the Fed is going to do something. But it is what it is, and it was to be expected. Now, having said that, if you look at the DXY, I can't really say that the DXY is impressive in any kind of a way, right? I can even potentially see an ascending wedge here, which is definitely not a good indicator for a potential bull run combined with the RSI divergence. So I'm not saying that it's unlikely to see another leg higher towards like 94.50, 94.70, which would be the next natural upside target. But I am saying that, this scenario, as the days pass, starts looking less likely than it did up until recently.
What's interesting, Steve, and I want your thoughts on it, is that, the dollar was really, a lot of bearishness and everything. And most people thought, we even talked about it, that the only thing that was going to, give us some type of bounce in the dollar would be risk off. But we had a dollar bounce with risk on. Kind of not what people would think would happen.
Yes, it's not the most usual kind of situation, but it's not unprecedented either, right?
Yeah.
And for periods of time, this type of instead of being an inverse relationship like positive correlation has been noticed, has happened in the past, and is probably going to happen in the future. Now, in a prolonged way, this can only happen under what was well known, and it's an older theory that has some merit, the dollar smile theory, that when the US is doing better than the rest of the world, you can have the dollar appreciating along with risk assets. I don't believe this is to be the case as we speak. I think that there are other factors for this short-term positive correlation. But on the other hand, I also don't believe that it's sustainable. So one of the two at least has to give, right? One of the two has to give.
Yeah.
Either equities or the dollar. And the reason for seeing, one of the main reasons for seeing such a, a soft reaction from the dollar is the fact that risk assets remain well bid, right? If at the same time we had like risk off, obviously the dollar would have had a much stronger rebound. There is no question about it. But in any case, definitely the risk on environment hinders the ability of the dollar to rebound further. And the more time we spend, the less likely, as I said before, is for the dollar's rebound to accelerate. As the days pass, as I said before, the chances of rolling over and just continuing lower, which is a scenario anyhow strongly backed by fundamentals, is becomes the more likely scenario. Now, under such an environment, also, by the way, gold potentially has started hinting at something like that. So we saw the following yesterday. We had a dollar positive reaction following the CPI data, but contrary to what would have happened a month or a couple of months ago with higher inflation data, gold actually didn't sell off. And in fact, after having like an undecided day yesterday, dollar is accelerating higher today. Of course, this is the normal reaction, right? The normal reaction for a normal thinking market is to want to be in inflation hedges when inflation is actually breaking one multi-year, actually multi-decade record after the next. I mean, for people that didn't realize, yesterday we had data that told us that inflation was 1% in a month, right? In a month.
Scary.
Yeah, 1% inflation a month. And it's even scarier considering that the inflation, the method of calculating inflation has been tampered with again and again, always in the direction of understating inflation. So who the hell knows how high inflation actually is if measured properly. But even if we take the inflation measurement as extremely accurate and honest, 1% inflation in a month. And it's not only that, it's that the vast majority of the months that have gone by through the year, we're seeing inflation accelerating instead of slowing down. So the mathematical evidence that this is transitory is simply absent, right? It's not that we saw like some big prints for 2-3 months and then we still see big prints, but lower it's time to at least hope that given a few months we're going to go back to quote unquote normal. So yeah, it is what it is. We've already had in the first half year, we're now approaching, like, we are at 1.5 times what the Fed predicted, wanted actually their target for a year. We're already at 1.5 times in 6 months, right? So that tells you all you need to know. Unless you believe the next 6 months are going to be deflationary, it's kind of a problem.
Yep,
So,
absolutely. It's pure mathematics.
yeah, for some reason, still people seem to be, trying to defy common sense, logic, and mathematics. Now, the other thing that is worrying when having to do with the dollar is the fact that looking at many of the currencies against the dollar, I really don't see anything else than corrective pullbacks. Look at the cable, for example, right? I'm not saying that we can't break through this descending wedge and accelerate lower. We might. But for the time being, absent of any other evidence, this might as well be just, consolidation after a big bull run higher. Look at the euro. Euro still confined within a symmetrical triangle, right? So no breakdown here either. Look at the Aussie and the Kiwi. After a huge move higher, we can still see the corrective moves lower unfolding in what is, for the time being, a very orderly and corrective manner. Here's the Aussie, here's the Kiwi, both in a channeled corrective move lower. So, no matter what you look at, none of these instruments tell you that that dollar is about to explode higher, right? Of course, things might change, but what we currently have on the charts say that the alternative is more likely than a surprise acceleration higher in the case of the dollar, right? Also, there are people that try to measure what's happening here based on what bonds are telling us, but we've explained multiple times why the bond market is in essence broken and you can't get much out of it. But even if yields break higher, which is technically speaking a very likely scenario, that doesn't mean that a little bit of higher yields will immediately translate to a higher dollar, because I remind you, it's all about real yields. And what we keep getting is that we have yields that recently have been nominal yields that have recently been depreciating, while inflation is accelerating higher. So real yields are really plummeting lower. And the only thing that's holding the dollar from plummeting lower is the blind hope that from being extremely behind the curve, suddenly the Federal Reserve is going to decide to do the exact opposite and find itself ahead of the curve by obviously reversing abruptly and violently what they've been doing for a long period of time. But they can't actually do that. They can move somewhat, which is going to be extremely underwhelming, but they can't reverse that. Who is going to monetize $2 trillion of annual deficits from the US government? Who is going to keep the financial markets, which create the wealth effect upon which this economic quote unquote recovery is being built? Who is going to rescue them if they actually seriously and strongly reverse their policy? Nobody, and they know that. So they're basically cornered with very few options left. And now we've reached the point that talking themselves out of trouble is not going to be working, because we have inflation that is there. It's rampant, having to do with recent global standards, and there is no evidence that it's about to cool off. So in my opinion, we're headed dead on with some kind of a collision. Now, the question that remains in my mind is, who is going to be the victim of that collision? Is it going to be risk assets or the dollar? Knowing politicians, the preferred victim is going to be the dollar, most likely. Now, that doesn't mean that equities cannot in the short term have like a really big accident, but if they have to, they're going to exchange getting equities battered with getting the dollar being destroyed. So that's why I'm not left with much of a question in my mind where the dollar is headed medium to long term.
And I agree with you, and that's why I have pretty much the same view. Right, but that was very nice, actually. Well done, Steve.
Thank you, Stelios. So,
okay,
Dale,
we have Adam Button.
Do we have Adam with us?
Yes, Adam is here. Good
Okay.
job, Steve.
Excellent.
All right. So you guys, any last words? I don't mean like, before you're like you're in the gallows.
I don't know if you know something about any medical condition.
All right. Any okay, encapsulate.
If you got a memo,
let me
get
guess.
another embolism, let me know.
All right, Steve is PPI in a minute. Did you
Yeah.
know that?
Yes.
I do. I do. I have it in
Just
front
now.
of me.
What
Here it
was
is.
the number?
Okay, guess what? Look at the year-on-year
It's
PPI data. Just look at this.
Yeah.
7.3%.
All right, I'm going to ask Adam about it.
I mean, 7.3%. Is there anybody that really
Yes.
believes that there is any type of company on the planet that is going to eat up this increase in cost instead of passing it on to buyers of the products?
Not anymore.
Yeah, exactly.
Yep.
I mean, even in the most basic textbook, PPI is listed as a leading indicator for CPI for obvious reasons.
Yeah, because it's unfinished goods.
Okay, enjoy the interview.
All right. Adam,
Excellent.
see you guys. See you, Steliosis, guys.
See you.
All right.
Bye-bye.
Adam, how are you, buddy?
Hey, Dale, you got me there?
Hey, I got you.
You can also
you-
share your screen if you want, Adam.
Okay,
Yeah.
I'll start
There
a
you go.
video there if you let me. Okay.
There you are. What a good-looking guy. Could have
Whoa.
been a model. Could have been a
Looking
model
off into the
instead of,
distance.
a lowly trader that, has to
Yes, love it.
grind it out. But I tell you what, Adam, you've been real right about quite a few things. What's on your mind today with, everyone talking about the hot inflation numbers that we've got in the past couple of days? And Paul is going to be talking to the House today. How do you think he's going to field these questions if they're smart enough to ask him about it?
Oh, did it? Well, I think, I'm so glad to be on today because I think it's such a wonderful day for the reflation trade.
Yeah.
I've been kind of circling the trade here for a little while. It's come off, right?
Yeah.
There's almost few obituaries written for the reflation trade.
Yeah, like lumber, because of lumber.
Oh man, I must have seen like 60 tweets on lumber in the last 2
Yeah.
days.
Could
So
give you slivers reading
they've
that
just
many
been-
tweets.
Exactly, dancing on the grave of the reflation trade. And I think the Wall Street Journal had something and it was dead. Big tech, pretty good again. It was a rough day in the Russell yesterday. But okay, so overnight we get a Democratic deal on
Right.
infrastructure. Now, you definitely don't want to declare any kind of premature victory on that. But I've been waiting. That's been sort of my trade call is buy the reflation trade again when we get infrastructure. Now, you don't get
Okay.
infrastructure all at once, right? So it's steps, and this seemed like a big step. We'll see when Manchin weighs in and Sinema and whoever
Yeah.
else today.
I think it's about 3.5 trillion.
And then they have the other roughly 600 billion, right? So this is huge numbers, which also plays into what Steve was saying about deficits and everything else. But I think that's a trade, I suppose he'd agree for later. And on the reflation trade, we also get OPEC today. That come out and you took out all the tail risk out of OPEC falling apart, and OPEC oil is really leading the sort of doing things trade, reopening trade right now. And I think for oil companies, this is great news. And then you get something like PPI. Again, it underscores that the pipeline inflation is enormous, right? And, I think the market looked through the CPI report yesterday and said, well, there are a lot of transitory things. And we'll give it back a lot in used cars. I mean, it's 45% year over year. I was kind of sharing a lot of memes yesterday about, that like the car in your driveway, did better than your portfolio manager last year. It just blows my mind that a used car, that's basically saying a car that was selling for $20,000 a year ago is selling for almost $30,000 now, which
I've never seen that in my lifetime.
I mean, that's just ridiculous. It just doesn't seem possible that anyone would actually be paying that much. I haven't been in the market for it myself. But the last sort of blow off, I guess, was rental car companies coming back. So rental car companies found themselves unable to deliver car rentals and they can't buy new cars because the chip shortage. So they went out into the market and were like price insensitive and just bought everything in the last couple months. And meanwhile, they're somehow able to spin that around and are charging people like $300 a day for a car rental. So it makes sense. But that's the sort of strange bottleneck you see in the market. But I'm interested to see the dynamic. I don't have a call on the longer term inflation trade.
Well,
And
gold is moving pretty good, and U.S. dollar yen is coming off, and yields are coming off. So,
right. And where I'm at today is it's just the reflation trade is on. I just think today is just a wonderful day to get back in on it, on energy and gold. I mean, that chart on gold, I saw you just had your screen up there. I mean, we had this tight consolidation for a week, and now it just seems to be popping, and there's not a lot in the way of gold right now. $20 today already. And the dollar coming off, I think back into commodity currencies. Sterling looks all right. And it's held up pretty well. And so I think that's the place to be. And it's just kind of back to what was working in sort of January to April.
So do you think that this bounce that we had in the loonie USD CAD, Adam, is over and we could head back down towards 120, or would you be a buyer on a pullback in USD CAD?
I mean, if you want to put the chart up, it's a good day to ask me about it because we have the Bank of Canada decision in 90 minutes.
All right.
So to tee it up, the Bank of Canada tapered a bit. They're buying $3 billion a week in bonds. And the consensus call is that they cut the taper, but there's not really a consensus number, but I'd say it's $1 billion. So they go from $3 billion a week to $2 billion a week. And there's probably a fairly firm consensus around that. If you listen to Macklem's latest comments, say, well, we're going to gradually remove it because there is a case for going a little more. GDP has been stronger, employment's been stronger in Canada. Oil's doing what it's doing. A lot of things are working. Plus, they have a little bit of breathing room on the currency that we're up 124 now from where we were.
120 about, yeah.
Yeah, I mean, I know it's rallying. Yeah, 124.50 today. And so there's a case to go a little bit more, but I think how that is going to come through instead is we're getting new forecasts. And I think they'll outline a lot more confidence in that. Maybe not just the forecast boost, which might not be that much, but they'll say, listen, the tail risks from the vaccine are gone. We're at 80% vaccination here now. Obviously, there'll be a nod to them as well. And then they'll say the inflation risks are now a little more prominent here, right? So their balance of risk tilts towards something more hawkish. And you can get a case, right now the baseline is taper $1 billion now, $1 billion in October, and $1 billion at year end. And now you've done the taper, and then it tee up a hike in the second half of 2022. But you can maybe pull that hike up to around this time next year, which is still H2, but right at the start of H2. And then you start to see that Canadian dollar move again. Plus, if the reflation trade comes back in. And so I think up here at 124.50 it's great. I think a short dollar CAD. I mean, the New Zealand dollar made a big move overnight. They've gotten more hawkish. If the Bank of Canada, if anything, I think today they'll be more hawkish, whether it's just that balance of risks or even a bigger taper. I think there's a great setup here right now for the Canadian dollar. And so, again, I'm just happy to be on today because it's really come together here today.
And I remember a couple interviews ago that you were pretty bearish US dollar Swiss, and we had a nice little bounce in Swiss, and it's starting to come off. Still feel the same way that US dollar Swiss could head lower, a lot lower?
I should try to get up a chart here. It was a seasonal trade, right? That was that was the you probably have it in your notes, but
July,
that was
I think it was
it was a nice sort of seasonal setup in dollar Swiss. It's not looking, in the reflation trade. I mean, that technical setup, if I remember, was really nice in that. I'm just struggling to pull up a chart here. It was really nice as well. I mean, I don't have a particularly strong view on that trade on the fundamental side. I mean, there's nothing new in Switzerland, but if we could get back down, I mean, it's sort of been a nice pop here. It looks like a little bit of a messy head and shoulders top in the last month.
Yeah. How about yields then, Adam? I mean, don't you think we should? Yesterday it was interesting. We spiked up, and then gave it back, and then spiked back up again. And today yields are lower in the face of this. So What do you think?
It was a funny one yesterday, right? Because everybody's
Yeah.
watching CPI and sort of waiting for it to go off. But if you remember, the CPI report prior was high as well. Yields went up that day and then crashed back down and fell for a month. And the sort of the idea becomes, well, you actually buy the long end on high inflation.
Right.
So you bet on lower yields because it implies the Fed will hike sooner, or maybe even make a policy error and then keep that reflation trade from ever happening. And that's sort of the kind of this playbook is working out again today, but it was odd yesterday because it didn't really happen, right? It popped very briefly and then came right back down. And then it was that auction that was very soft in 30s. So the US government sold 30-year bonds and the market was only paying 2%. And the market thought, well, ahead of time, what was going to be 197. And then it kind of blew out a little bit up to 204, but now it's come right back to 2 today. Settlement for that sale is tomorrow. So maybe you start to see some of that liquidity build up after that. On yields in general, I believe they have to go higher. But, well, as well as I do, that's been just the toughest trade in history. And so,
can you explain to me, Adam, why the Russell is the only index that hasn't made new highs since the spring?
I was looking at the chart yesterday. I don't know if we get to the chart. I don't know if you're still sharing a screen, but whatever.
Steve,
anyone can pull it up on their own.
All right.
That
the fundamental reasons for why they're mainly U.S. domestic stocks and some regional banks. Why aren't they making any progress?
It's that reflation trade. It just a little out of focus there. It's just taking a pause. And I look at that chart and you have an incredible move, right? From whatever, it was basically a year-long move. And now we had this huge consolidation, like 6 months of it. And I think it's getting ready to go again. Now, why hasn't it gone? I mean, the growth value trade. There was a B of A, Bank of America fund manager survey yesterday. And it said they're all back into large cap tech. I mean, they're just as heavy in stocks as ever, but they're out of the value growth rotation trade. And they're out of the small cap, big cap trade. And so now it's sort of a non-consensus trade is value again, which is what you want getting into a trade. And I think the setup, and I just couldn't believe how much it was down yesterday on, not too much worry there. And I think as yields back up.
How do you know the difference between consolidation and distribution? Only after the fact?
Yeah, I'm sure. I think I don't really think of it that way. It's just a flat chart will eventually become a moving chart again. And, gold is a good example just in the shorter term over the last 2 weeks where you just like doji star for doji star on the chart. And then you get a pop today, a $20 pop. And I just tend to think that follows through. And it's just a bigger case in the Russell. And I really think that whole trade is set up so wonderfully right now. But the last leg of it is Powell today, right? So if we get Powell come out and say, hey, listen, it's transitory, all those things that we've probably said before, but as long as he strings the words together right and doesn't screw it up, I think he can tee up that taper. Daly came out yesterday or the day before, the San Francisco Fed president said around the turn of the year. So end of the year, start of next year. And that's the kind of idea.
That's a consensus.
It really is, tee it up a little bit in Jackson Hole, maybe change the statement in September, and then you announce it in November to take place in December, something like that.
All right, just switching gears a little bit, Adam, what do you make out of Wells Fargo pulling personal credit lines? Does it mean anything? I mean, it's not like, I experienced it in 2008 where they cut my credit limits before we had another crisis.
Give me a rundown.
Have you heard the
story? I don't know the story, Dale. I'm not going to fake it. I'm not the kind of guy to fake it.
All right. Well, it's out there and they're starting to report on it and it's personal.
Bizarre. Yeah. It's bizarre to me because Jamie Dimon was out yesterday, JP Morgan CEO, saying, listen, everything's perfect. People have money. They want to spend it. Balance sheets are in good shape.
So maybe Wells Fargo specific, maybe.
I tend to, I mean, is it
All right,
really?
well,
I mean, it's that
check it
it
out
is.
and let me
I
know.
hate to
Yeah.
just brush it aside. But boy, it seems like a pretty good time to be
Kind
extending
of a
credit.
yeah, and and a friend of mine just got a one of those consolidation credit cards where you can move all your balances to 0% for 18 months, and then this story broke, and I'm just wondering what you think about it. But anyway, that's no big scoop for me, but I'd appreciate your input. Maybe you could Skype me later and let
Yeah.
me know what you think about that. Anything that you want to wrap that you think? I know the reflation trade. Of the reflation trade, what do? You just buy a little copper, you just buy a little gold, you just stay long equities.
Yeah.
What else would you, and
Well, yeah,
oil?
I mean, the copper trade is really set up. I mean, I don't want to get
Yeah.
into copper fundamentals. It's a little bit beyond me, but the
Yeah.
copper guys, they're pretty bullish on the supply demand fundamentals there.
Yeah.
And along with so that, yes, absolutely. Gold, I think gold, I like it here as a trade, and I think I like buying it usually on that seasonal, like sort of November-ish timeline. I think it probably
Yeah.
comes together a little bit better then for a real big move. But we can get back above, close to 1900, I think, on this move again.
Okay.
I like oil. I really like oil companies. And we talked before about
Yeah, and they
steel.
haven't participated. I've heard, because the market's in backwardation, the oil market, that the oil shares aren't performing as well because it's let people look at, where oil prices are priced on the curve down the line, and it doesn't look as good as it does right now.
I
Is
think
that a factor?
I don't. I think that's part of it. I think it's just they're hated, right? I don't think long-term investors even look at oil. They say, "Well, oil's dying," and I
Yeah.
think that's overdone. And eventually,
Yeah.
you say, "Listen, this company's trading at 30% free cash flow this year," and I think that eventually wins out. But because they're just so cheap. And natural gas is getting tighter and tighter. It's hot again in the Southwest this week, or set up for next week. I mean, the latest forecasts are bullish for natty. And then if winter's cold, I think the natural gas prices can just explode.
Wasn't there some kind of negative seasonal for July because it isn't summer and it's fighting the seasonal trend?
It's just blowing it out.
Yeah.
And because you usually, that air conditioning demand is off the charts right now. And a lot of plants have converted from coal to natural gas. So there's a secular change in the market where we look at they always look at 5-year inventories and you see where we are. And we're getting towards the bottom of the range in excess supply. But there is a higher demand curve that's happening right now because power generation is an enormous part of natural gas demand, and they're moving coal plants to natural gas. So there'll be a step up. Plus, there are more and more exports in LNG. So the market just gets tighter. You have to remember, there's a huge arbitrage in natural gas. You can buy it in the US for $3, and you sell it in Europe or Asia for 15. Right.
I know, it's unbelievable. What a spread. It's just getting it over there. I would, why don't you and I scuba dive across the Atlantic and drag a boat with us, like, a strength move. And then there's one other thing that I want to cover with you. It's going to be what's happening with crypto. Right. And, Bitcoin has been under pressure. A lot of people talking 26,000, and I noticed today that Ethereum's holding up better than Bitcoin. At that $26,000 level, I'm talking about it like it's a foregone conclusion. What are your thoughts with the way crypto's acting here?
I mean, that bounce from the bottom hasn't been great.
Yeah.
And but the breakdown hasn't broken down the way you thought they might. Now, the El Salvador story might have kept it up. I mean, the Bulls really excited about that. And you kind of start to see that, over and over, even this week, I thought, okay, if we get through 30,000, we might run, or 33, pardon me, in Bitcoin might really run some stops. It did a little bit, but not in the way, not that sort of emotional trade that we had in May. So it's kind of showing positive and negative signals. And then even today, like it goes down and then it kind of pops right back up to 32,000. And I tend to think that the downside is coming, that we need this flush, but I think it happens when it happens. And then maybe everything above that, above 30,000 at least, is just noise until we get some kind of shoe to drop or some reason for it to get moving again. And that, that's always hard to predict in Bitcoin. Between Bitcoin and Ethereum, I think that trade is going to be a steady winner for Ethereum.
Okay. Do you know why? Why?
I think that it's the energy. I think that if it's utility, right? You can do some things on the Ethereum blockchain, and I just don't see, the Bitcoin really pushed back on energy, right? There was a report out maybe 2 weekends ago, saying, now it's using 50% renewable energy, whatever it was. It was a little bit of a stretch, and I think the market probably read that right. Because it's all a pump and dump, right? And I just, the energy use, whether it's renewable or not, it's great in some other cryptos as well, but I think ultimately people recognize.
What commodity do nations go to war over besides oil, Adam?
What commodity?
Take a drink.
Yeah. What did they go over war for?
There you go. Now that it's not coffee and it's not
tea.
soccer.
That's tea. That is tea. And I would talk about the Tea Party in America.
It is. It's water. It's water. Okay. So, I mean, take a look at Lake Mead and what's happening out here out west. Water supplies, everything that could go wrong right now, high prices, water shortages. It's what everyone was worried about for Y2K happening 21 years later. What do you think? Is there a way? I know there are water stocks. Do you look at that as an asset class in commodities?
It's funny. I lived in Argentina for a little while, and their country, like their full-on military, would do exercises where it was in the newspapers and everything. The American military was invading Argentina for their water. I guess they have a lot of, relatively a lot of fresh water. And I would say to them, listen, like Canada has more fresh water than Argentina, and America could actually pipe it back if they wanted to go to war with anyone. They're not coming to Argentina to haul water back to America, whatever it is, 40,000 kilometers.
Yeah, well, you're lucky you had.
I think it speaks to the point of that insecurity, though, around water, or that, like the reflation trade, or the scary thing about the inflation trade is what you see in Cuba or South Africa this week. When you get inflation, you get trouble in emerging markets. And when you get water shortages, people go nuts.
Yeah.
And we're building like crazy in the desert, right? Like Arizona. It's on track to be what, the third or fourth biggest city in America?
Yeah, no shortage of sand. Yeah.
Yeah, well, exactly. But it's the lack of water underneath it that will get people upset.
It's a problem. But they built a big desalination plant out here in San Diego.
Well, that's sort of the energy trade, right? Like that's why I'm a big time bull long term. I think the zero cost energy, I try to envision a world of zero cost energy, whether it's nuclear or renewable tech. I believe that people, not zero cost, but very low cost. And then you can do things like desalinized water. Now, the problem you get is you have a lot of salt to get rid of, and there's no good place to put it. But they're obviously doing it out in San Diego. They do it in Israel, and I'm sure lots of places. But you can solve a lot of problems because it's insanely energy intensive to take salt out of water. But you can solve a lot of problems with very, very cheap energy. So I don't see any real energy or water bets. I like utilities and water utilities for sort of a safety trade, but I think I had a whole water portfolio at one point, but a lot of it's just delivery, right? Not.
Yeah, who owns the water? Who owns it?
Listen, we got to take care of the planet. There's no doubt about it. But like I said, I'm bullish on oil. We're going to need that.
Oil and water. That's that's how some people's relationships are.
Not me and you, Dale. Not me.
I know, buddy, because we're journalists that ended up being in the market. So
just trying to figure it all out, Dale. Just trying to understand the world.
Well, you always open my eyes every time we talk, Adam. I noticed that you're doing some new things at Forex Live, some education and so forth. You want to let the viewers know?
Yeah, we have this sort of an ongoing, if you go to our site and there's a little box on the bottom, it's sort of an ongoing webinars and different projects on education. So we're out there. I'm trying to do more video, trying to, we have a YouTube channel. Good video on there right now. If you want a little bit of inspiration, it's a guy up the street from me, Dale, $400. He turned it into $250,000 in 4 hours. I mean, just an insane levered trade. And it kind of tells the story how he did that, which I don't know if there are a heck of a lot of lessons in it, but you can't argue with that kind of
in what market?
Oil. He's a 19-year-old kid. And so he's walking around. So I would have changed. I don't know what my life would have been like if someone would have handed me $250,000 when I was 19. But
I know what my life would have been.
The next 2 years,
I wouldn't be here. I would not be
gone.
here. Anyway, thanks so much, my trading warrior brother, for being with us again today. Always enjoy bantering with you, Adam. Thanks very much.
Likewise, Dale. Have a wonderful day.
Okay, so that's a wrap, everyone. Everyone's thanking you, Adam. Thank you very much. And that's a wrap for us. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. You could join the crew in the Morning Edge in 19 minutes. Adios, everyone. You're very welcome, everyone. And thank you, Adam Button.